Back to the final hour session. It is just after 3 o'clock Eastern Time on Tuesday, October 20th. Markets are just off all-time highs by about 30 points, and I think what we are dealing with is a wait and see. Markets have stalled. We had the October 10th, high to low. Markets bottom last week at that same level, 65.50. We're back up near the highs. 67.64 is the all-time high, and we're trading right now at 67.40. I got a couple of trap levels going into the close today. I'll be watching those through the session. 67.50, 67.30 to 35, and 6700. Obviously, the 6700 is probably a long shot from here, but the 67.30 to 35 looks decent, and the 67.50 as well. As we get into the final minutes, I'd say like 330, 340, 345. If I can manage these trades into the close, I will do my best and hopefully see some full profits on some of these trades. So let's see what happens. Here's what I'm watching. So this is my iron fly that I put on this morning. It's up about $60. Here's my call side fly up about $15. They get better. This one potentially has a pay of $5 credit. This one has potentially a payout of $10 credit. This one up to $10 credit as well. Again, unlikely, probable. The final 30 minutes or so is where all the magic happens in these, butterfly traps. So the iron fly versus the, this is, same thing, a double up here. So we'll go double up, rename. Double up calls. This is double up puts. There. So my put fly, iron fly, call fly, looking to manage these for a net winner on the day between the three. So either a test of this positive negative gamma pivot point around 67.35, that would be a nice little winner today. Potentially, I'm trying to think on the call side, that'd be pretty perfect. On the put side, I think it's put side at 35, call side at 30. So my perfect spot's going to be around 67.32. But if it comes back in this yellow zone, awesome. If we go up to kind of hit this stickiest gamma level by the close today or in the next, like I said, 30 to 45 minutes, come back up to 67.50, that call fly should be looking better for maybe, I don't know, $1.25, $1.50 credit. If I can manage it to $2 plus, that would be excellent. Max profit would be $5. So we will see. All right. We also had a pretty big sell-off in gold and silver, which I don't think is a bad thing. I posted a video today on TradingView. So if you'd like to take a look at that, that's in my Telegram. Posted it right here in Telegram. So here's the link. S&P stalls, gold, silver, reality check, US and China watch. And here's what I wrote. Gold and silver finally correcting. We're seeing anywhere between 6 and 10% corrections. I think there's still more to go. I hope there is. I'm looking at dollar cost average into both of them with allocations of $1,000 per level on my cash accounts, $2,000 per level on my margin accounts. US indexes, all of them, S&P, NASDAQ, Dow, and Russell, stalling just off all-time highs. Sideways is a behavior, right? Everyone thinks like the market only goes up or only goes down. Sideways is a behavior. It might seem boring. It might drive us crazy. Like, what's happening? Is this a accumulation cycle? Is this distribution? What's going to happen? Are we topping out? Why can't this market go any higher? But staying here at the highs, watching the VIX drop from 29 to 17 certainly feels a lot better than watching the market roll over hard by a 5 or 10% correction. I did think we'd have one. I thought with the VIX going from 16, 17 to 29 that the markets would be down 5+%, and it just wasn't the case. The market topped out. I think for like a 3.3% correction, 3.2% correction all in one day. And we tested that low, went right back up to the highs. And here we are again, just kind of sniffing out those highs. It's not quite there. 67, 64 are the all-time highs in the S&P. AI narrative remains optimistic. I am playing AI primarily through Bitcoin, utilities, energy, and the physical goods side. I have CLF, XAA. Those are trades in steel and aluminum. FCX, Freeport McMoran for copper. And I'm also in XLU and XLE and XOP for some energy related plays and utility related plays. Financials and capex spending remains firm. Money continues to flow into this build out. This is, I mean, one of the most important things and one of the most important narratives that we see. So, is it a bubble? Everyone likes to say that it is, but bubbles can last a lot longer. And if money keeps flowing, I think the bubble stays persistent, right? I mean, I say bubble, but look, George Soros has a famous saying to show me a bubble and I'll invest because they usually run higher, right? I mean, you could say, is gold in a bubble? I mean, gold had a parabolic move these last couple of months. Is it a bubble? No, it's not. It's just, it ran hot. I'm glad it's correcting because I thought for a moment there, if gold just blows through like, 4,500 or 5,000, I mean, whew, okay, but I'm glad it's at least correcting. I think a lot of that is because there's risk appetite coming back into the markets. I am interested to see if gold and silver's correction right now is going to also lead to some risk appetite in Bitcoin, maybe some stable flows in Bitcoin, and also back into the stock market. Trump versus China is likely noise. Eventually, I see there being concessions and agreements as a likely outcome. I don't think either one wants to see their indexes go down. I don't think either one wants to, go tit for tat on how this market's going to be struggling to go higher when they can both benefit from higher highs. Right? China benefits from Western money. U.S. benefits from rare earth minerals. And if we're going to look to play catch up, I listened to this in a podcast last night. But Ford's CEO went to China and was coming back reporting on the dark factories that are in China, which is essentially robot only. There's no lights on. These things run 24/7. And he said that it is very humbling to see like this is the future and we're not there yet. So US has a lot of catch up to do. And if we get to that point, this where, I think that Elon Musk and Tesla and humanoids and auto taxis and autonomous, whatever, like that's all important stuff. In addition to having the materials and the energy to build this stuff out. Are there bottlenecks? Sure. But right now the spending is there, the money is flowing. And as long as that narrative remains intact, I think that things continue to look more optimistic in that space. And you should be thankful that the market has something to latch onto to be positive, because you could argue that if it wasn't for the Mag 7, we'd have lackluster gains, right? 40-50% of all this year's gains have been because of Mag 7, NVIDIA, and then we've had a rip on Google and we've had Apple at all-time highs. I think Apple's at all-time highs today. So, be thankful that you got some Mag 7 to stabilize the market and keep money flowing in. Be stable that the market, or be thankful that the market is, optimistic about AI, whether you want to call it a bubble or not. Money is flowing. That's good for liquidity. That's good for build outs. That's good for growth. And hopefully we continue to maintain that narrative. Seth, were you asking me on my Discord? I had somebody asking about UNG earlier, or at least natural gas. I like natural gas. I'm in long. I'm long UNG out to 2027. So I'm giving myself upside right now. I was doing a diagonal spread. I've lowered my cost basis. Let me see where my cost basis is. So UNG. My cost basis is down to 1396 on UNG. 1396. And we're trading at 1317. So I could run right in here and sell some calls and try to lower my debit again. But it's basically running uncovered. And so what I'm looking for now is if we start to see a run up back into this potential range. Do we go from this 1250 low? We obviously came a little bit lower around 1170, but if we run back up into the 20s, I'm probably taking some profit. I don't think I'm going to be super greedy here. If I get a 13 something debit and it runs up to $23, $24, I take $10 of profit. That's nearly 100% gain. I do have some decent contracts running on UNG. So let me check here. So calls at 45, iron fly at 20. Watching for the next 45 minutes. Let's go to UNG. UNG, I bought the $5 call. This is a debit of $12.28. I've lowered my debit. Do I have another one? Debit of, let's see, 1550. Break even 1396. Net debit. Let's see, price break even 1420. Price break even 1396. Okay, so I've had a May, June, July, August, and August part of this diagonal spread that I have not gotten it called away. So it's like I said, it's still not in profit with a 13.96 break even, but a run back into 23.24. This is 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 contracts. If I can get, let's say, $10, $10 a contract, 9 contracts, and that's a good chunk of profit on natural gas. Could it be bigger? Sure. Yeah, maybe. But from an option contract that time is not my friend, if I'm up that much, almost 100%, I'll just take it. Getting long here is probably not a bad play. My concern on UNG is like, this isn't something I necessarily want to hold, like buying the stock, because there obviously could be some additional, pricing and splits and like the what is it, the nav that gets reset after a certain period. So I don't know if I get the thing back to range highs, I'll go to like $23. If we get to $23, I'll still have time in these trades, but that'd be a nice spot to be taking some profit. So yeah, so I do like it. I like natural gas. I like energy. Like I said, I was trading. This is what I'm trading. I have stock in AA, which is Alcoa. I have stock in CLF, which is Cleveland Cliffs. I have stock in X. These are both steel makers. So Alcoa is aluminum. CLF and X is steel. I have FCX, which is copper and gold. That's Freeport McMoran. I have XLU. I have XLE. I have XOP. And I did have URA, but I closed out. That was uranium. I closed that one out. That was a really good run, actually. I think I more than doubled my position there. I took like 100+% on that. So this is what I have exposure on, and of course I can throw UNG in here as well because I do have a call out to 2027. So UNG. Okay, and if you want to get fancy, I do also have some crude light futures. So anything energy materials, I have some of it. Steel, aluminum, copper, gold, utilities, energy. That's it. Like it's a mix. Not huge positions, individual trades, but what is running uncovered? Alcoa is running all by itself, uncovered. It's up some profit. CLF and X running uncovered. They don't generate a lot of premium, so I'm just letting them run with the buy positions that I'm in. FCX, a bunch of I put in a combo of puts, so I just sold naked puts. XLU ratio spread, XLE ratio spread, XOP ratio spread, UNG long call, and a 111 on oil. USO, I think I also have a trade in USO. Let me double check that. USO, yep, I'll add that to the mix. I do have USO. And this one is I think I started out with a ratio spread. So let me confirm that here. USO, these are 2-in-1s. Yep, these are ratio spreads. So USO is here for ratio spread, 55 by 50, pulled in $3.60 on that trade. That's not bad for USO, and I'm happy to take assignment. I don't want to necessarily, but there's right now about an 80% chance of profit. This one is out into 2028. I went out a ways, so that's why I collected this much premium. But at least it's an income trade. It's fine. If we end up getting down to test these levels, I'll probably just buy the shares. But pretty good probability of profit. I think that's a good income trade. And then I can also dip my toe in the water and scale in. Here's my UNG diagonal spread. I don't have a sell call on it. It's just now a long call. The other positions, like I mentioned, CLF and Alcoa. So Alcoa have some shares. CLF have some shares. And FCX, I talked about some puts. FCX is here. Just show one individual account. So FCX is here. We're trading at 41. I have the 37, 35, 33, and 30. Pulled in $5.14. This one is basically, it's not a leap because it's less than a year, but it's out to summer of 2026. And it's down right now. There's still about a 70% chance of profit. We had a big disrupted move on FCX. So I think this is when all the tariff noise was coming in with copper. But this low was around 35. I mean, I would still be willing to own shares. I would be willing to own shares here, right? So owning this, pretty good support back to 2022, pretty good support back into 2021, pretty good support here with Liberation Day. This is April 2025. And if, look, if we need materials and demand is up, these probably go higher. 2020 is so far away. Yeah, but so is this AI build out. I mean, the AI build out in truth probably is going to take 10 plus years. Okay. But the demand is we can't get enough. Everything we have is high demand, high demand, high demand. So I almost wonder if like some of these plays become so demanded or so much scarcity that they just drive prices way higher. So I think it's an interesting play. It's certainly different than just chasing Mag 7. It's different than chasing tech, right? I don't like tech. I think that tech is at risk because if you have AI and your large language models, and then all of a sudden they become a little bit more self sufficient, or what we're getting as consumers is like the watered down distilled version because we don't have the computing power to give what OpenAI is using right now, or what I mean, you see what I'm saying? It's like we could have um, we could have better like video AI, better learning AI, better self-learning AI, but the computing power that it takes is going to bottleneck everything right now. So, I mean, I just think it puts a lot of software companies at risk because eventually all these things could be done with far less capital, far less labor, and far fewer people. So I think that does make a lot of people, more productive. I think that's the point is if you learn how to utilize AI, learn how to leverage AI, hopefully it's, going to feed the entrepreneur spirit for a lot of people. Or, people that are very savvy in this stuff can do a lot more with less and make that. I mean, they can side hustle and freelance and 1099 it with companies that need it. Right now, there are companies that are literally like, hey, we'll be your AI solution. And they're getting hired for a fraction of the cost versus keeping people on payroll, right? It's like a consulting fee. And that's now. So imagine what, 2 years out, 3 years out, 5 years out looks like when all this stuff is hopefully going to keep improving. So again, this is a positive boon for the markets. What derails it? Aggressive change in policies and bottlenecks in energy and lack of supply. That's what bottlenecks it. That's what stalls it. But the demand right now is insatiable. So I think we have to at least respect the fact that money is flowing and doing everything that it can to try to leverage whatever this build out is, you know? And, I've listened to some interesting content. I've read some interesting stuff. Some argue that AI is basically dumb because it's not. I mean, let me see. I think I took a screenshot of this. This is just a podcast I listened to the other day. Let me find the screenshot here. So it depends on who you are using it, but will be brought in earnings in 2026. AI services, okay. So some of the feedback. So social chat, tries to. So this is like AI services that tries to please you, but that could get stuck in the wrong data. That could bend away from the truth just to try to satisfy you. Um, like for example, if you were to tell AI like, no, 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 it's spelled this way, and you keep repeating it, eventually AI might be like, yeah, you're right. So it doesn't actually give you factual stuff. And then there's research AI, which would be for the detail oriented person, which is you want accuracy, you want demand, you're going to go deep dive. And this is where, there's going to be commercial use for it and also personal. This is where I think like one individual, one guy that I follow right now, Jordy Visser, I followed him since, what was the hedge fund he was with? I don't know. There's a podcast he did in Search of Green Marbles. The hedge fund he was with, I don't remember. I think it was Weiss Capital Management. I think that's what it was. But anyway, he's now doing a bunch of research for a company called 22V. And he's doing presentations like every Saturday. He's got papers. He has Substacks. He's out there on YouTube. He's partnered with Anthony Pompliano, who's big in the Bitcoin space. And anyway, Jordy's like in his 50s or 60s, and the guy has taken this full embracing of AI. And I mean, he spits out some amazing stuff. When I first started following him, he was to me like a Bloomberg savant. I mean, some of the stuff he would create and synthetically compare and correlate, I was always blown away by what he could do on Bloomberg. But he has also been doing it for 30 plus years. So anyway, stuff like that is pretty cool. And then shopping and gaming, the other two things for AI services. The big thing right now is like the partnerships with Shopify, the tokenization. If Shopify and AI combine, it's like there's a direct competitor to Amazon, right? It's like we could disrupt the logistics here. Anyway, and then gaming wise, it's like right now I'm seeing that the costs of things are going down. Like we actually have deflationary direction on AI related services and AI related build outs and AI related uses, which I think is awesome versus everything is getting more and more expensive. Okay, what else? Let's see here. Chat GPT is dominating AI referral traffic. App Store downloads. Chat GPT is leading social apps. Monthly active users, OpenAI is 800 million users active. Monthly, Gemini is at 450 million, Grok at 64 million, Claude at 30 million, Perplexity at 22 million. I mean, OpenAI, ChatGPT, it's leading the charge still. Let's see, your nuclear stocks up. That's it. So just a little research this week. It's I think it's at Jordy Visser. He has a YouTube channel, so youtube.com/, I think it's Jordy Visser Labs, and he posts a video every Saturday. Let's go Jordy Visser. Is that it? No. That's him right there. So at Jordy Visser Labs. So that's him if you want to follow him. Again, I typically get 2 videos a week. It's with him and Anthony Papaano, and Jordy does usually a Saturday video. But look, he is very bullish. It's it's a lean. I think that there is a lot of deep diving into what companies benefit the most. This is a lot of stock picking. This is using basically put in an argument for this person in a podcast versus this person in a podcast. These points, summarize it. I mean, he does all this stuff, and it's kind of cool just to see like if anybody's in the space of AI growth. I mean, this is where I'm forming the opinion that I think that playing the hardware side is better than playing the software side. I think software is going to be made obsolete, or it's going to be you can do more with less, and some of the stuff is going to be free instead of like having to pay Adobe or having to pay software companies that are out there like just in the space that don't have a purpose in 5 years, right? I also think that AI is going to be very disruptive to everything in the S&P. I think the AI is going to be extremely disruptive to everything in the labor market. So this isn't all like rainbows and optimism. It's like there is a dark side of this, which is, does AI become sentient? Does it become self-learning? Is there singularity? And if so, what does that mean? I mean, are we building this like omnipotent AI that can just take over everything, or are we going to actually give it a purpose? Like, hey, run millions and millions of use cases for curing cancer and give it a purpose versus just like letting it be this like, unhinged, I don't know, open source everything like that. That's the scary stuff. So anyway, that's just if you want to check it out. Okay. All right. What else? 67.41. Check a couple of spot prices here. It's 320, 328. Let me go spot check these. So puts, I mean, come on, price, like you guys, it's got to be better than this. So there's still some time here. I've got 32 minutes, but it's like, 30 to 35 would be ideal. 45 to 50 would be fine. 50 is ideal. Like, I mean, I'd like to see this at like 50 again. So just going to keep watching this on my side. This is starting to fill up a little bit more. Hopefully if I could pin this thing at 35, that'd be perfect. That is literally like a $900 to $1,000 winner today. That'd be pretty ideal. If we get back to 50, that's a $450 winner. So closer the better, on point right at those levels would be pretty ideal. So perfect pin would be 67.3250. Perfect pin would be 67.50. My 67 is going to be a $40 loss or $50 loss, whatever I took the put fly for this morning. So I'm just trying to net positive on basically putting in 3. It was 3. I don't think this is going to work. Nope. I need drawing tool, Epic Pen, ink to go. Yeah. I don't know. Sometimes my Epic Pen fails on me. I have to like close it down. But anyway, I want to see where this thing closes or gets close to in the final, 10 minutes or so of today's price action. Still confident in the Russell for end of year. Yeah. I mean, I think if we maintain this posture where, SPX is pretty well supported. I think there, a dip is still fine. A dip is still expected. This is what I warned this week as far as price action. Right now we are basically in like a blackout period, right? We don't have buybacks. We don't really have any U.S. data. The government is still offline. Yes, we have inflation data, but I don't think that's enough to really create the next big thrust in price action. So I'm warning for a pattern like this where you can connect the highs like so and connect the lows, and the market ends up going poke, fail, and we have sideways. So I just don't want us to be, jumping into bullishness when the market might just fake us out. And I don't want us to panic sell into what is pretty good bullish structure, you know? So how do things get really bad really quickly is Trump holds the line on a trade war and we threaten 150% tariffs, and everything that we built for 2025 as far as this big pivot just completely gets eroded. That's a lot of negative stuff that I guess could happen, but I'd say that's a pretty slim chance. Okay. As long as earnings are pretty positive, which I think right now they probably will be. Financials reported like everything pretty robust. We've put we've kind of dampened the fires, and that we've stomped the cockroaches out, I guess, for your private equity stuff that happened last week with regional banks. Did regional banks respond? I mean, off the sell off, that was a 2-day sell off. We've recovered a little bit. It's not like regional banks are back down to this 2025 low. It's not like they're back down. Remember when banks had several closures and several bankruptcies and several insolvencies back in 2023? Because now look at the price. It's nearly doubled, you know? So I just, the market finds a way to it's news today, it's gone tomorrow, you know? So it's contained, I think, for right now. I think there is a bigger picture. I talk about this a lot in my Telegram post for what I did on TradingView today. But looking at, and I talked about this with Kane yesterday in our Gamma report, if we have, the 10-year yield after the Fed cuts in October and after they cut again in December, I am concerned that if the 10-year yields are not continuing to go lower with trend of what the historical cut cycles have gone with, that's a concern, because we're trying to grow through everything right now, and we want to grow with lower rates. And I think right now it's, we still have elevated equities at all-time highs. We have a, more accommodative Fed. We're going to start running the balance sheet runoff, and QT is going to be ending. So we should have more liquidity and more flows going into the market, in addition to CapEx spending, in addition to an accommodative Fed. And like I said, as long as trade talks don't completely go belly up, there are some concessions on U.S. side and China side, and then globally things benefit. I think this just keeps the markets pumping along. Plus with this recovery after having the VIX drop the way that it did, it usually does well. Having a high September historically does well. Having a VIX crash from 29 to 17 historically does well. All these things have pointed to okay, if this rhymes, this is still a positive for stocks. Financials earnings were good last week. This week, if most of the companies report positive earnings and consensus is solid, forward guidance is positive, all this is good. So look, if we were trading at 24 VIX, I'd be more concerned. But at 29 back to 17 VIX, I think that's what the market needed. For whatever reason, the market needed that ventilation, and it happened. So long VIX, which we were long VIX with my crash insurance masterclass. We made about 100% on that trade. Would I have loved more? Sure, but we still had a 280 debit that closed out for a 530, 540 credit, 550 credit. I'm happy with that. It was 90+% return, and it was good enough for at least the short-term trade. Now I'm still hedged out to April of next year on a VIX play in case we get another a chunk of volatility in, maybe till the end of the year. So anyway, like I said, I'm just warning for this potential sideways pattern. If it's a broadening pattern, be aware of the fake out at the top, right? And here's what can realistically happen on Friday with CPI news in the morning, we might actually gap higher, right? Let's say for a second that oil prices are still down, CPI comes in lower than expected. If we've got it here on Bloomberg, take a look at this. Okay, economic calendar for Friday. Just go to Friday, go to 8:30's data. So 8:30 a.m., we have all of our CPI numbers coming in, right? So core CPI year over year forecasted 3.1, and previous was 3.1. Headline CPI, previous 2.9, forecasted 3.1. Just imagine for a second that this headline CPI comes in at 2.9. I think that's a big win for CPI. I think that market could gap higher, pretty substantially. Now it might fade that gap, but I still think we could gap higher. I think we could gap to all-time highs by Friday if the market is holy crap, inflation's not going up. not going up higher than 2.9. So, we'll know more on Friday at 8:30. But this is the only real news that we have to go on for the last 3 weeks, you know? So we'll find out. But if it's slightly higher, okay. Set expectations. We could have some volatility here. This is a big data point. Um, but it doesn't really stop anything. I mean, if we want to grow, we need inflation. This inflation is higher than I think consumers would like. Um, but if we're seeing a lot of deflationary pressures elsewhere, I mean, rent is going down, shelter prices going down, energy prices are low so far. Now, until that turns up, if we see gas prices turning higher, energy prices turning higher, gas goes back up to, gas at the pump goes back up to $3.50, $4 a gallon. Energy prices go from, mid 50s to 75 or 80. That changes the inflation narrative quite a bit. But until that happens, it's like, I don't think this market really cares about 0.1% higher in inflation because we're trying to grow at 2 to 3%, you know? So can we outpace it? That's the whole idea of paradigm C is you outpace inflation, and the best way to outpace inflation is to still be a part of these assets, be in the stock market, be in gold, be in silver, be in Bitcoin, be in stuff that can go up in price. So you hate the fact that you're losing purchasing power in the dollar. You hate the fact we got this debasement trade. The debasement trade's been around for decades. It's just now becoming mainstream because it's like it's something sexy to talk about. But it's been happening for a while. We all know the purchasing power has been going down. You look at money supply and how the markets have gone up, it's essentially breaking even. In dollar terms, I mean S&P is way higher, but in gold terms S&P is down. In silver terms S&P is down, but in Bitcoin terms S&P is down, right? Because they have not kept pace with those other assets. So anyway, this is, a pretty important watch list for Friday for news. Okay. All right. So, like you asked there, Seth, about year end, let's take a look. So, let's go Qs. Okay. Qs are right back up to these highs, kind of the same thing. Watch for something like this. If we connect the highs and we connect the lows, we could have a bit of a broadening pattern. So don't be faked out by this, but sideways is understandable. We could have some sideways price action. Okay. The Dow actually poked some fresh highs today. But again, I wouldn't be surprised if the Dow does this. Broadening pattern, right? Pokes the highs but fails. If we're going to have some additional volatility coming in the near term, I could see that happening. Russell, for a moment, made up all of that sell off from the 10th, hit some fresh highs. Again, you can see this pattern. There's a high there. There's some slightly lower lows. So is it kind of stuck here? But look at all of the dynamic support. Lots of dynamic support, right? And I think the Russell ultimately benefits from is if the Fed keeps cutting and the 10-year yield continues to trickle lower, I think Russell benefits. In fact, it might continue to outperform if we see that the yields continue to go down. My concern is that if the yields don't go down, it's going to be a sticking point where small caps still aren't getting the benefit of rate cutting. So that's like the big question mark, which is why I'm not trading the Russell super aggressive. I was aggressive back in March and April. I was aggressive. My break even price is like 189 now, 188 on my Russell trades. We did a campaign trade for my project options edge. I've got all margin accounts, ratio spread. Let's see, 180, 150 is a break even. I have 183 break even. I have a 190.74 break even. So, and they're covered up to 202, 204. Some of my IWM covers, they're in the money because price was running, which is fine. 204, 204, 204, 204. I mean, they're all covered at 204. So I've got anywhere between, I'd say $14 to $24 of price of profit as long as price just kind of maintains. We'd have to drop a decent amount if I was getting this to be back at the money. Like the Russell would have to drop 17+%. Could it happen? Sure, it could happen, but I'd say unlikely. If I look at these covered calls right now, probability. Let's go to the option chain here for December. Option chain for December of 2025, 205, 204. Right now, there's about a 90% chance this trade stays out of the money. So based on even higher volatility, there's a 90% chance this stays out of the money. So if I wanted to let the shares go, I let them get called away, but I'm not going to let them go. I'm going to keep rolling this for more time. If I keep the strike price the same, I get more credit. If I can roll my strike prices up on the chain and also out in time, I'll keep increasing my profit, my net profit. Okay. So to answer your question, yes, I like Russell. Not super aggressive, but yes, I still like it. For waterfall income, we closed out our 3 Russell trades for profit, so we don't have that any longer. We do have a Dow trade in, we have a QQQ trade in, we have SPY trades in, we have lots of SPX trades in. But I still like those with our strategy twos we've been deploying. Okay. What other questions? What else? Newsbreakers this week was busy. We did a lot of trades. Let me just call this out here. Newsbreakers. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trades this week on newsbreakers. So not all of them are filled. Some of them are pending, but we have 13 either pending or filled orders. It's an active little shotgun that we threw out there into the markets with good probabilities. Values that should be going higher, buying dips, buying discounts, and trying to get a price that offers up like 100+% profit. Okay. So if you'd like to join me for Newsbreakers, I'm running another trading session tomorrow at 1 p.m. Eastern time. We'll continue to go through my list. I have my list right here that we're going to continue to work through tomorrow. So TAL down to NCLH, that is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 stocks. And I'll also talk about Mag 7 because we have Apple, Amazon, Meta, Microsoft next week as well. So we'll take a look at those stocks for next week. All right. So we'll do another live session tomorrow at 1 p.m. Eastern time. If you'd like to join me for that, I think it is prosperitypub.com/news. Yep. And we're down to $9.95 for the year to trade, 12 months with me at Newsbreakers. All the trades I took right now, the ones that are not filled are still active. You can get those trades in right away. So I'll put that in the link if you like it. www.prosperitypub.com/news. Okay. Somebody's asking about the DXY. So what's your August supply? You're talking about this area here. I mean, it's kind of coming right into those highs. I could see this coming back to this area where we have, yes, the high just over 100. Okay. But because this was a falling wedge, the starting point of this wedge was around 101.90. So I could see like the 100 to 10. I'd say this 100 is resistance, right? We have some 200 EMA resistance. We have this 10-month moving average resistance. I could see that holding. Okay. But if we get a move into the start of this falling wedge, that puts the correction up towards the 101 to 102 area. And I'd be looking to then resume selling. So I'm not calling the top at 100. If I wanted a dollar cost average, I would say that the ability for price to get up here, then start to show resistance to sell back off. And maybe that's not the case either. I mean, if it wouldn't really make a lot of sense to me to see this. If the dollar gets stronger and the stock market breaks to all-time highs, that doesn't really have a fitting correlation. So if the dollar gets stronger, I almost have to think that the stock market's due for some more volatility and most likely a correction. Okay. So if the dollar is, resistance here or resistance here, and we run up and then immediately sell back off, then it's a lot easier for equities to justify staying resilient and getting to all-time highs again if the dollar turns quickly. So right off of the 100 handle, right? Okay. So keep an eye on that. All right. What else? We're coming into crunch time here, 344. Take a look at my SPX. Iron flies up a little bit, calls up a little bit. Net on the day, like maybe I take a small loss today if it's not going to give me a perfect pinch window. But I'm hoping that in the next 15 minutes we are closer to 50 or we're closer to 35. We're trading at 42 right now, so I don't care. I just want to see a bit of a movement towards either 50 highs or 35 positive negative gamma. We'll see what the day gives us. Okay, so I'm gonna try to close these out by the end of the day. So my double up now on the call side It's up about 97%. My iron fly is down about $9. My double up put side is down full loss at 50 cents. So I'm accepting that loss there. Now I'm trying to see if these two can come out for some net profit. And right now, no, I'm you know up 36, down 10, down 50. I'm down about $40. $40 for the day, which not a big deal, but hopefully we can see those flip into that butterfly trap and give us a nice fat profit by the end. Okay. So 14 minutes left. Let's see if we get something sticky around like 50-ish or even 40 is okay. 40 is not terrible. 40 is not great either because the call side there, put side, yeah, I need like 30, 32.50. So yeah, ideally I need like 67.32 or 67.50 for either this iron fly or this call fly to pay the most. So if it's somehow elusive and finishes around like 40, it's no bueno. Like my kind of dead zone here is like 67.40 to 67.45. That window is going to offer no profit for me, but it's manageable. I mean, if I lose all three of these, I'm going to lose like $1.60. It's certainly not the end of the world. Are you looking at DXY and indexes? What do you see on CPI Friday? I mean, I'm curious what the market. I mean, what I'm going to be watching on Friday is futures. I think the best thing to watch on Friday is going to be futures market because that's going to have the move right before opening bell. Right. So if we go, let's say 15-minute chart on futures, don't be surprised if the market does something big, like create a massive surge at the 8:30 newsprint. Right. If you go to futures right now, here is the high to low structure. So one thing, I mean, I don't know, and this is maybe a guess here, but because of this structure, and we spent all this time retracing and then retesting lows, all this time retracing, I could see a couple things happening. Right, we spend the rest of this week just kind of slowly testing these highs and then rolling over hard on Friday, and it's just kind of predetermined by technicals in the market. Maybe we see a higher print in CPI, and the market absolutely hates it. Okay, or the market is pushing up to these highs, CPI comes in better than expected and the market loves it and it gaps to new highs. So I think the best thing to watch is going to be futures to see where we're looking at for open. We could either have a gap higher, gap lower. I'd say there's a decent amount riding on it because this is the first big news that we've had in the last 3 weeks. So just some thoughts there. Markets expecting 3.1. Yeah, I know. But I do think in the background, we've actually had some deflationary pressures. We do have, and look, shelter is a big factor. Shelter is a big weighting factor to CPI. Shelter has been going down. Like it's the biggest lag in inflation data, and shelter has been going down. Home prices have been going down. Rent's been going down. I mean, I want to say it's something like 30 to 40% of the weighted inflation is all because of housing and shelter. So maybe it improves because of that. We're very lucky that energy prices have been very, very steady and very low. So clearly, inflation could have gotten way out of hand if we had elevated energy prices. Okay. And coming into the Fed's not until the end of the month. I think it's October 29th. So Fed meeting is October 29th. And then we have our next one in December. So another kind of interesting blackout window where, when do we get non-farm payroll? When does the US government come back online? Honestly, it's like, I feel like Democrats are like, we need to negotiate. We need to open the government. The Republicans are like, yeah, we need to talk about China. It's like, does anybody care right now that the government shut down? Like, markets don't seem to care about it right now. It's just like, oh, it's no news until it's news. But yes, there's obviously people that are working and not getting paid and not working and wondering if they're going to go back to work. And it's super disruptive from that perspective. But the markets don't seem to give a crap because we're sitting here, 22 points away from all-time highs. Do I believe in data manipulation? Of course. Of course. I think that we are intentionally keeping CPI numbers lower because basically the Fed policy is going to be reacting to it. Right? So if the Fed is data dependent and inflation is higher, the Fed's like, well, heck, maybe we need to pause, which nobody wants to see. Right? So yeah, I believe in data manipulation. I think that non-farm numbers are all over the place. It's hard to even rely on them now. And honestly, the numbers don't even matter because what truly matters is the assets you're trading. If the market reacts to something, does this do anything to derail the markets? Probably not. Could we have an adverse reaction? Of course we could, right? Of course we could. All right. Now my call side is up 260%. That's not too shabby there. Getting better. Let's see if we can stick this thing at $50 right now in the final 10 minutes. This might be pretty sick here. Let me see. I know I have a take profit for $3. It's trading for $1. Let me get it. I'm going to keep a close eye on this one. So I'm just going to sit tight for the next 9 minutes until this close. I'm watching price on this other screen. So this trade I might be modifying. I'm going to try to get like a big fat winner. I mean, again, it depends if we get up to like anything like 46, 7, 8, 9, and 50 is great. So 67, 46, 7, 8, 9, that's all like in my profit trap territory. See if we get this thing to push a little bit higher. Okay. I mean, I'm all in today. This is what I need for a break even. So I'm all in for 50 and 40 and 75. So if I can make $1.65 on this trade here, I make money on the day. So if this offers me $200 of profit, great. So I would need like a 240 credit, makes me some profit on the day. $3 makes me about $100 on the day. Now we're at 45. Let's go, baby. Let's go to 46, 7, 8, 9. Let's see a pin price here in the last 10 minutes, 8 minutes here to 67.50. Come on. It's a bit slippery these final few minutes, but at least price is going in the right direction. Hopefully give me a pin trade. Okay, you're welcome, Donna. Thanks for being here as always. China had their weakest GDP for the last month. Okay. And that's why I think there's concessions on both sides. I think that, if we think like, oh, China's running away with AI stuff, well, they need us too. China needs Western money, and I think they want it. I think they're willing to negotiate. They know there's an upper hand in rare earth minerals, right? I believe they have the upper hand. They've been doing this stuff for 30 years, but I still think they want Western money. If they want to be world number one and they want to, be a dominant force and a financier and back everything with gold and commodities, it's like it's a global status. You can't just be communist and be isolationist and be world number one. It's like you've got to get the world to back you. So I think they have to play nice, and I think we have to play nice too. So, like I said, I think that the path of least resistance is probably there will be concessions, there'll be agreements, there'll be negotiations, and it's a lot of noise. But it's always been that way. We've always had noisy optics on U.S. and China relations. All right. Come on now. 7 minutes left. Can we get a surge into 50? Can we get a drop into 40? 40 is not good. Not good for me. I need like a 46 to 50, or I need like a 35 to 39. Come on. Don't stick at 45. Be at 46, be at 47. The highs of the day around 52. That'd actually be pretty good too. Let's see if we can get to the highs of the day. So I'm watching this here. If we can sneak up here to a nice little surge end of day to get up into like 48, 49, 50, that would sweeten the deal in this call fly. All right. So watching closely, this is the level I need to be monitoring. If I get this up towards like $2.50, $3, I'll take the profit. All right. We're at 45 and change. Come on, baby. 46 and change would be good. Recent highs at 47 and change would be good. Let's go. That butterfly's up 225. Let's get it up in the $150 to $200 range. Come on. I believe in you, butterfly. Come on, man. Don't stop. 45.67. 5 minutes left. Come on. Give us a surge. Give us a pump. Highs of the day, 52. Let's try to test them. Is anybody in this trade with me? We took this morning in daily profit play. All right, final 5 minutes. Give us a push. Don't you fade, you bugger. If it fades, you might as well fade hard. Fade 10 points if you want to. I don't care. This is what I'm looking for. I'm looking for anything in this area. So from where my mouse is, like anything in here is a nice profit trap, and anything near this yellow sticky zone is my profit trap. So right where it is right now is no bueno. So I'm going to see either price dumping towards this sticky zone, this yellow spot, or getting above this thicker line to 46, 7, 8, 9, and 50. 5 minutes left. In all honesty, it's like I might just have to ride this thing out to the close and see where it settles. See if I get lucky. But if it comes into, 35 while I'm sitting here for the next 4 minutes, great. If it comes up to 49 or 50, maybe I can close out a trade, but we'll see. I would be a little bummed to see it settle between 40 and 45, though, I'll be honest. But we'll find out in 4 minutes, huh? All right. While you're at it, while you're watching this exciting close of the day, kindly hit that thumbs up button for me if you're watching on YouTube, youtube.com/Chris Pulver or youtube.com/Financial Wars. All the little likes go a long way. All the comments go a long way. I think that's one of the biggest contributors to supporting a channel and getting it out there in the algorithm is just liking the content. So that little thumbs up button goes a long way every day. Okay, 4 minutes left. Come on, price, do something good. Come down to 38 or 36. Go up to 48, 49. I don't care. Just don't stay here. 3 minutes left. Open of the day, 67.36. The market's technically moved about 6 points today from open to close. So great job by market makers. Nice work for the old daily profit play. All right, 3 minutes left. Interesting fall that we had this morning at it was 12:50 p.m. Market dump from the high to an intermediate low today. We went from 52 down to 29. So about a 22-point drop in 15 minutes. All right, 2 minutes left. Come on, price. Find a trap. 39 is a trap. 38 is a trap. Give me some bucks, would you? Watching this, these are the two trades I'm watching. Iron fly and double in my call side. This is a call fly. This is an iron fly. Right now, they're both down. There we go. Come on, baby. Drop into 39. Drop into 38. Get sticky around 35. 2 minutes. What's up, Angus? How are you? Okay, 40 and change. Can we break the 40 handle? We're close. 67. There we go. Come on, iron fly. All right, this one that I have highlighted might be getting profitable pretty quickly. Come on, baby. 39, 38. This is good. Final minutes. Go down to 35, you turd. Give me something good. Come on. Final minute push. Push down to 35. Yes. 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 Let's go. Seven. Okay, I'm up. There we go. There's $200 of profit. 6. There we go. Oh, freaking sweet. $6. Let's go. Oh my gosh. Oh my gosh. That might be pretty perfect. Ooh. Hercules. That was a pretty lucky close. I've got a 6735.31. That iron fly, $227. So I'm going to do the exact math on this thing. Okay. So what paid me was my call side. Okay. My call side. So the put side would have been a loss because it was 35 by 25. My put side would have been pinned, which is pretty good, but my call side is what would be how I calculate the number. So a 30 to 40, that gives me 10 wide, minus the 75-cent risk. So 925 is my max, and this thing would be $5.30. I should have made 395 bucks on this trade. Should have made 395 bucks on the trade. So I think I just won the day. I'll take it. I'll see where this thing cash settles officially, but my call is either this is accurate at the close at 227, or if this is the math that I'm doing, it should be around a. I guess I'll check here. Let me go into analysis. So here's my profit. Oh, you can see I've got a bunch of crap going on here, but I wish there was a way to zoom out of this thing. So there should be some profit here. Like I said, about 390. Can you see my flag? This tiny little flag right here showing a $390 profit. So anywhere between like 370 to 390 after fees. Okay. I'll take that as a win. That turned out to be a lot better than I thought. So anyway, I'm going to do an update here. So we see, I'm just going to do a quick update for Telegram. Trade update. Bullseye, pin prices. SPX closed at 6735.35. My 6730 to 6735. Iron Butterfly should be closing for $370 to $395 to win the day. If you stuck around for my full daily profit plan session, this trade was taken live. Okay, good stuff. All right, well, that finished a lot better than I thought, and nice having a visual roadmap on price action, isn't it? I said that we either had the gamma level at 6750 or the sticky positive negative gamma point at 6735. Can't ask for a better close than about 20 cents away from that. Yes, it was, William. So we didn't take the typical daily profit play, but all session I talked about these trades. So I sat through a Newsbreakers webinar in session, and at the end of that, I took a live trade. You stuck through the session, you got it. You bounced out because I was talking about Newsbreakers, you missed the trade. But we talked about it this morning live in daily profit play. I said it wasn't an official group trade because I'm taking the trade based on what I see for those sticky levels, and it was cheap. I got into the trade for a 925 credit. I was only risking 75 cents in the trade. I took it live in session. So anyway, net result should be about 370 to 390 profit. That helps me win the day. I was on risk for, like I said, 50 and 40 and 75 minus 375. I should make 200 bucks on the day for that trade. Satisfied. How do you like DJT? I don't. I'm not gonna. I mean, to me, it's a meme stock. Bitcoin, Ethereum sells. Bitcoin, Ethereum falls. Last week had good sell set up. Take a short. Where some people say market makers stuck. So DJT upside to 18 bucks. All right, let me see. I mean, maybe. It's a maybe. You put in something to find risk, go after it, you know. I mean, there is a structure trade here that I see from, you know, if it's a bottoming pattern, then yeah, we could move up and measure this up to like 17, 17.50, $18. I think it's not a bad option trade. You know, I mean, I wouldn't really want to, you know, buy shares, but if I could do something that's cheap, make 50 to 100 bucks on it and be right if price goes higher, I think that trade's fine. Yeah, I mean, it looks okay. All right. Good. So, Charles, what are you asking there? Why are so many people saying market makers stuck with small man gain? I don't know. I mean, so think about all the derivatives in Bitcoin. Since the invention of BlackRock's ETFs and FBTCs and IBITs and all the mining companies and all this other stuff, everyone is using Bitcoin to sell premium. So I think that volatility is really in Bitcoin. I think there's intentional institutional call selling to generate premium. What I'm what I'm hoping for is that those sellers get stuck in a squeeze. That's what I'm hoping for, because if they get squeezed, it's going to force them to buy, and we're going to have like a nice little parabolic rally. So I think to me, this is still an accumulation. There's room for Bitcoin to keep sliding lower, but it's still very well supported around like the 90 to 95 handle. Okay. All right. So I've seen some people asking where the trade was taken in this live session. This live session, I was live until 11:15 today. I took the trade in that window. We finished up my newsbreakers. I spot checked our daily profit play to a pending orders. I took that iron fly in the session. You go back and watch it, and I literally said, like, look, I saw the group drop from like 200 traders down to like 50 or 60. I said, unfortunately, that's a lot of trades that lose out on the trade, and that's the one that helped pay us today. So, I'm live for a reason. Just trying to take some trades, but it's all good. I mean, there's always tomorrow. Don't sweat it. All right, thanks everybody. I'm gonna let you go. I'm gonna jump into a meeting. We'll be back and do it again tomorrow. 9 a.m. daily profit plan room. I'll be live. Newsbreakers tomorrow as well.